Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Wednesday, July 30th. In today's episode, we'll tell you about a huge railroad merger that could reshape the logistics in the US. Then, Waymo is partnering with a rental car company. Finally, let's recap earnings from Spotify, Boeing, and Novo Nordisk. One of those companies is in deep trouble, and it's not who you think it is. We're just a couple days away from the August 1st deadline when the pause on reciprocal tariffs is set to expire. And President Trump on Monday said that he plans to move forward with a blanket 15 to 20% reciprocal tariff on imports from countries that don't have a trade deal in place. That was somewhat reassuring to the markets because the 15 to 20% range is in line with the deals the US has reached recently with key trading partners like the EU and Japan. The big wild card here is China. A trade deal between the two largest economies in the world is still a work in progress. Remember, the two sides agreed to a framework agreement a few months ago in London, and they gave themselves until August 12th to figure out the final details. The two sides are meeting in Sweden this week to talk trade, and according to reports, the two sides are expected to extend the tariff truce by another 90 days. Surprise, surprise. So I think tariff pause on China and the TikTok ban are the two things that are just going to keep seeing extended. Overall, though, at least the markets have clarity now on what to expect with tariffs. Yeah, the rates are higher than what we started the year with, but they're still way below the Liberation Day shock that we had back in April. Let's run through some headlines, starting with railroad companies. Union Pacific is going full speed ahead on their $85 billion acquisition of their rival, Norfolk Southern, and this would be the biggest rail deal ever. Now, I know talking about freight rail companies isn't as sexy as talking about AI or self-driving cars, but this would be a big deal because this merger would create the first coast-to-coast freight rail operator in the US, with a network that stretches across 43 states. Union Pacific dominates the West, while Norfolk owns the East, and together they control nearly 40% of US freight rail. Under normal circumstances, this kind of deal probably would get derailed by antitrust regulators. But these days, the rail industry is facing increased competition from trucking. On top of that, the Trump administration is seen to be more merger-friendly than the previous administration. So the two rail giants saw this as a window of opportunity to consolidate the market. The combined company would have a market cap of around $200 billion, and it would put pressure on other rail companies like Berkshire Hathaway's BNSF. So we might see another rail merger soon. For some context here, the last big merger we had in this industry was Canadian Pacific's $31 billion takeover of Kansas City Southern. That merger created a single line from Canada down to Mexico. Now, this merger is about to be dominating the US domestic freight market, and if this deal does go through, it could reshape the landscape of American logistics. Let's shift gears and talk about self-driving cars, because Google's Waymo just announced plans to expand their robotaxi service to Dallas, and they're teaming up with a surprising new partner, Avis, the rental car company. As part of this partnership, Avis will handle all the behind-the-scenes work required to operate a robotaxi fleet, like charging the EV robot cars, doing the maintenance on the cars, and managing the depot operations. This is the first time that Waymo is partnering with a rental car company, and both sides say that Dallas is just the beginning. They're planning to expand their partnerships to other cities down the road. It seems a pretty smart partnership for both sides. I'm surprised that Waymo didn't do this before. Now, Waymo can just focus on improving the tech behind the robotaxi, and Avis can do what they do best, which is managing a fleet of cars. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Boeing shares are up this morning after the company posted a smaller than expected loss and showed signs of getting back on track. Boeing has started to increase plane deliveries, which was up 63% year over year in Q2. And Boeing 737 MAX production is still capped to 38 per month by the FAA after that terrifying Alaskan Airlines incident, where the door plug ripped off mid-flight back in January of 2024. But Boeing says it plans to request an increase to 42 planes per month later this year. So yeah, Boeing continues to turn things around, and the stock is up nearly 2% this morning. On the flip side, Novo Nordisk is in free fall this morning, down more than 20% after the company cut its full-year guidance and announced a new CEO. The Danish pharma giant now expects revenue growth of 8 to 14%, which is down from the 13 to 21% they gave earlier. And that's mostly due to a slowdown in US sales of their blockbuster weight loss drug, Ozempic. Finally, let's talk about Spotify. We love Spotify here at Capital Currents, but their shares are taking a hit this morning after the streaming giant missed Wall Street revenue estimates and swung to an unexpected loss last quarter. The company reported an 86 million euro loss, which was down from a profit of 225 million euros a year ago in Q2. Spotify blamed this surprising loss on a higher social charges, which are payroll-related costs tied to a rising share price. That said, Spotify's subscriber growth was a bright spot. Monthly active users hit 700 million, and premium subscribers came in at 275 million. Both of those metrics came in slightly higher than expected, but I guess that wasn't enough to shake the investors' confidence, and Spotify shares are down 7% this morning. That's all for today's show. Keep navigating those waters, and see you tomorrow.